Everyone, welcome to the TimingResearch.com Crowd Forecast News, episode number 234 for August 12th, 2019. We are recording this at 1 p.m. Eastern Time, and today we will be discussing the 307th weekly report. So you should see that on the screen right now while I'm talking, but you can also get your own copy by going to TimingResearch.com/reports. And you can access either web or PDF version. Also, just a reminder, you can get the audio-only podcast version of all episodes of the Timing Research shows. Just go to your favorite podcast directory and search for Timing Research. Today, I got a full lineup that I've arranged for. Jake Wujastyk, or Wujastyk.
Yep.
I'll get the pronunciation right soon. Wujastyk. Okay. Jeffrey Hirsch, Erik Gebhard, Anka Metcalf, and Jim Kenney. And Jim is going to be moderating today, so I'm going to go ahead and turn it over to him.
Great. Thanks, David. And we're going to have a very interesting show here today because with the situation in Hong Kong airport and other factors as well, the markets are definitely having volatility hit them again. And that period we went through where the volatility stayed between on the VIX 10 and 15 seems to very much be behind us. Transportation average is trying to hang on to 10,000. S&P is trying to hang on to 2890. So I'll be very interested to hear what our guests have to say. But before we hear that, let's find out who they are. And Jake Wujastyk from TrendSpider.com. Please introduce yourself, Jake, and a little background on yourself and your company.
Sure. So my name is Jake Wujastyk. I have been trading for about 15 years or so. I started trading when I was 13. My dad threw me into the markets, wanted me to try it out, and pretty much have been addicted ever since. And so that's kind of how I got into the TrendSpider side of things. I started sharing my charts probably 2 or 3 years ago, and then started a subscription for a year to teach people just general things that I was looking at on the chart and the strategies that I was using. But then during that time, I was brought on by Dan, our founder at TrendSpider, to help kind of expand the business and help with the development as far as product ideas and that type of thing. So TrendSpider is really a platform, charting platform to help your technical analysis be more efficient. So it's not there to replace your technical analysis. It's there to complement what you're doing by hand and be a secondary perspective through automation of trend lines, fib levels, but also you can do this manually as well. But it's really there to be a secondary eye. So a lot of the time what I'll do is I'll draw a chart, let the system draw its trend lines. I'll compare the lines and see, is there something I'm missing? Is there an obvious wedge, or is there an obvious channel that I'm not seeing? And so it's a very robust system. I'll be using it while I'm showing my charts today, so you guys will get a little bit of a view of how it works.
Okay, sounds great. The next guest is going to be Jeff Hirsch from StockTraderAlmanac.com. And Jeff, fill us in on a little bit on your background and what the company's up to. Jeff?
Hey, Jeff, you're muted.
Sorry about being muted. I was trying to not let you guys have any background noise there. Thank you for having me. Jeffrey Hirsch here. It's actually Stock Traders Almanac with an S, plural traders. And the 53rd edition of the Stock Traders Almanac is at the publishers to be printed out this fall. I started in the business back in late 89, early 90, working for my father, who created the Stock Traders Almanac, which has been around for 5 decades. I am also the chief market strategist at Probabilities Fund, which is a mutual fund based upon the seasonal work that we do in the Almanac. It's PROTX is the ticker, probabilitiesfund.com. And that should cover it. I've been around for a long time, about 30 years or so, and we use technicals, fundamentals, seasonals, common sense, macro analysis, and everything available to us.
Okay, great, Jeff. Thanks a lot for being here. Next up is going to be Erik Gebhard from altavest.com. And Erik, quick background on yourself as well, and what are we doing at AltaVest?
Yeah, sure. Thanks, Jim. Well, let's see. I've started way back in, looks like in the dark ages, back in 1991. So I've been doing this for a while in the futures and futures options space. And over those years, we've kind of modified our business model to hopefully change with the time somewhat. And about 16, 17 years ago, we began to get really deeply involved with S&P 500 options trading. And in particular, really selling options and collecting premium, more specifically on the ES or the E-mini S&P 500. That's where all the volume is, so that's where we are. So we've developed our own proprietary approach and platform, along with trade alerts, where trades are automatically generated, and these are spread trades, and a lot of them are generating premium and collecting premium, and they're all covered spreads. And then once the algorithm generates those particular spreads and you have an order that might be filled, now the algorithm will actually track that, monitor it for you, and close out that spread position for you when you reach specific profit or risk thresholds. And also you can get trade alerts as well. So we make it pretty simple, taking something that's very, very complex, sometimes six-legged spreads, and just package them up, deliver it to the client, and they can just touch accept, and the rest of it handles itself. So that's what we're doing these days.
Great. And we'll get into more of what everybody's doing at the end of the broadcast. So definitely stay tuned for the end, because we'll get into a little bit more specifics as well. Okay, finally, last but not least, of course, is Anka Metcalf, and she's with TradeOutLoud.com. And many of you are familiar with Anka already, but Anka, could you give a quick background and what you're up to over at Trade Out Loud?
Thank you so much, Jim, and thank you, David, for having me here today. My name is Anka Metcalf, and I have been trading as a professional independent trader for the last 16 years. And I've been focused on day trading futures and swing trading equities. Prior to becoming a professional independent trader, I come with 10+ years in investment banking, and I'm also the founder and CEO of TradeOutLoud.com, which is a trading education company that is focused on educating individuals how to day trade and swing trade the futures and the equities market. I'm also the designer of an institutional proprietary trading system based on price, support, and resistance, and the multiple layers of price support resistance that we encounter into trading. Also specific trigger times, because there is there's a much prone trigger time at certain times throughout the day than others, and I have developed this system. Therefore, it helps with my day trading, and this is applicable only to day trading, whether you're trading stocks or whether you're day trading futures, because it helps you develop a really good trading plan within that trading session. I'm also very much involved into chart synchronicity and divergency. I like to trade what is in play that specific day, and not want to be like have the tunnel vision to, let's say, be very focused on one index. Let's say, you know what, I'm just an S&P trader and that's it. No, I'm not a market maker. So I'm going to be trading whatever is in move that day. So what that means is that when, we have earnings, I don't know, from NVIDIA, that, we have pending earnings this week from NVIDIA and Cisco, I'm not going to be focused on trading Russell. I'm going to be focused on a move potentially into NASDAQ. And that's pretty much it.
Okay, Anka, and of course at the end you'll give more specifics on how to get involved and talk to you directly. Briefly, I'm Jim Kenney, content provider, optionprofessor.com, and I've taught thousands of people the uses and the risks of options, particularly on hedging, where we try to take option positions to offset the risk that we're taking in our portfolio. I'll be moderating here today, and I'm going to get right into the first question, which is, which direction do you think the S&P 500 index will move from today's opening on Monday to Friday's close on the 16th? And we're going to start.
I think that we're going to be heading higher. However, my level of certainty, we're going to discuss later about that, is not that high, but probably higher.
Okay, sounds great. And Eric, how's your feeling for this week as far as the direction of the S&P?
We're looking for a lower close by the end of the week, and I would suggest, along with Anka, that I wouldn't bet the farm on that though. So there's a lot of volatility day by day.
We'll get into the probabilities in a second. Just this is just to get an idea of where your gut is right now. The next one here is Jeff Hirsch. Hey Jeff, direction from Monday's opening to Friday's close. What do you think?
Well, I mean, we're market neutral right now, and it's funny you just mentioned the word probabilities. Our fund is called Probabilities Fund, based upon the historical seasonal probabilities over several time frames. So we've been market neutral for several days. The beginning of August is quite weak, but we go 1x close of business tomorrow for 4 days, Wednesday, Thursday, Friday, Monday. So depending upon where we finish today or tomorrow, if we get a turnaround, could be higher, but unless we lose a lot in the next 2 days. Otherwise, we're looking to be long the next end of the week, Wednesday through Monday.
Yeah, I can appreciate it's difficult to do up or down this week because it does seem like the markets are on a ledge right here. And obviously, if the ledge breaks one way or the other, obviously it would be more obvious where you think the market might be going. Last but not least, we got Jake Wujastyk, and he's going to give us a tip on what he thinks for this week.
Just based on the chart that I'm looking at, I'm really looking at the daily EMA 50 and the weekly EMA 50. And until the price action breaks between one of those, I think we're going to be range bound. That's just simply my opinion, but I do think we probably close around the weekly EMA 50. And if we break that, it could get interesting, but just simply my opinion.
All right, when we get into more reasoning behind it, you can fill out the ignorant like myself on what EMA is all about. So let's go to question number 2, and we're going to talk about confidence. What probability percentage would you put on your idea that we may be going higher, Anka, by the end of the week?
I'm 50-50 on this one today. And if you want to, so the chart, like Jake mentioned, we're kind of like in a sideways, we are in a sideways range, and plus we don't have the catalyst to move the market other than the earnings that are pending, and some stocks. We still have a nice bulk of earnings this week, but the economic calendar is kind of muted right now. We only have some activity going on into tomorrow before the market opens. We have the CPI, and we also have on Thursday the core retail sales, and that's pretty much it. We don't have a lot to work on in terms of the economic calendar as being a catalyst, so we're just going to have to wait for the earnings, and I think that the price action is going to be a little muted. And if you ask me, today feels like an option expiration day because you have all these indices that are really coiling, like you've mentioned at the beginning. They're literally coiling at the whole numbers. We have the Dow at 26,000. We have the mini S&P at around the 2,900. We have 7,600 for NASDAQ, and we also have Russell at 1,500.
Yeah, and you got the VIX at 20.
Exactly, and you have the VIX at 20.
Yeah, and you got turnaround Tuesday possibly tomorrow. So who knows what's going to happen? All right,
crossed.
let's switch over here to Eric and get a probability number from him. What do you got, Eric?
55%. How's that for you? I think that's just a little bit better likelihood that will be lower. I'm looking at the 60-minute chart, and we're below the. Let's see here. I'm looking at the EMA, the 50 period. The 9-period EMA. We're trading below that, and we broke out of a bit of a, I guess you could call it a pennant, but we can get into that a little bit later. But yeah, so I'd say cautiously bearish.
Yeah, I mean, the momentum obviously is to the downside today. The question is it going to have some kind of a turnaround because of something occurring? But the momentum, obviously, when you're down 26 is not up. All right, so let's turn towards Jake. And Jake, what are you seeing on probability?
Oh, man. I would say 60%. and that's just because it's August, and August generally can have some pretty crazy swings. And it just kind of looks like a classic dead cat bounce from last week, and now we're kind of going into the next round. But still not very confident in that. But I would say maybe 60.
Yeah. Okay. Well, let's turn our attention to the third question here.
You want my response?
I gave it to Jake, right?
Jeff Hirsch?
Oh, I didn't talk to Jeff?
Nope.
Oh, I'm sorry, Jeff. Excuse me. Yes, Jeff, please give me your probability.
Yeah, I mean, that's the name of our game. And I think Jake's right on, 60%. I mean, based on the mid-month spike seasonally, we don't go long or short any direction unless it's 60% or greater historical probability.
And are you looking at this EMA as well?
Exponential moving averages?
Yes.
I look at lots of exponential moving averages and other moving averages and lots of levels. I mean, I'm seeing some sideways actions, very typical summer seasonal behavior, especially in early August. And, the levels I have, and we're looking right at 28.75 is where we have some support and
right,
depending on which side you are. And then below that is 28.15, which we bounced off of. And above that is 29.55. I'm talking S&P cash. I don't do the futures like you guys. So that's the kind of range I'm looking at. And I think further down, support 27.25, where we held in June, is another important level. And these are, sort of round, thick line, crayon lines, not pinpointed little fine lines.
Right. Zones rather than specific prices. Okay, let's hop over to reasoning, which I think people would like to know more about rather than just our probabilities. What's the reasoning behind these feelings? And so, Anka, give a little background on how you came up with your conclusions or your guess.
All right. Can I share some charts here?
Absolutely.
All right. Jake, you're going to like this. This is TrendSpider.
Oh, cool.
All right. So I love this platform. Started using it for about a week and a half now. And I'm absolutely loving it because it gives me the pressure points and it's right in sync with what we teach at Trade Out Loud and the way I have been trading for so many years. So right here, we have a daily chart of the SPX. And as you can see, definitely we're in a very strong uptrend. We have an ascending triangle here. We have the pullback following the FOMC rate decision, and then further tweets that took the price lower into the ascending support trend line. And I think that it's also nice to take into consideration the prior fib retracement that we have from the prior swing high to the prior swing low, because we were making new highs and we actually came in from those new highs that we were making. Also, I want to add something else. Like if you recall last year, so despite of all the history that has been going on, we have to acknowledge the fact that, with the presence of algorithms, price can be taken anywhere. And I respect historical data, but let's not forget last year that we had a lot of volume in the market in the month of August, and we also had the market higher last year, where it's not really usual to have a higher market in August. August is usually a range bound kind of market. It's kind of like a decision market is waiting for the end of September, mid-September, and the beginning of the new earnings season, that things starts to dampen down a little bit. But right now, what I'm seeing into the SPX is that it's really at this ascending trend line, and I think that's a very good point right here, because if today we're going to establish a narrow range day, and in fact we triggered just a little bit below Friday's low, but as long as we're still holding within this trend line, and even if we're penetrating a little bit lower today, if tomorrow we're gonna have that turnaround Tuesday that Jim mentioned, and if we trade over this high, I think that we have a nice tradable void to exploit into Tuesday and Wednesday, and moving back even and moving forward into the end of the week. I think the real catalyst this week are going to be some earnings, and I think that the market is waiting. We do have a lot of earnings that are coming in on Tuesday, Wednesday, Thursday, some big names that are reporting. So I think the market is taking a little pause. To me, this is just a pause in the market. It's a digestion type of move based on the price action that we've had. I mean, let's face it, we came from these lows right here. In 1 week, we rose all the way into the high. So we closed into some really, really nice highs here. And the one chart that I love to focus on, especially at the beginning of the trading week when I do my analysis, is this high right here, the prior weekly activity. And we had a huge bounce from a technical level, from a dynamic support level at the 50 SMA. And we came back to retest this prior high right here from May 6th. And right now, this becomes resistance. But as you can see, the price action is trading inside the prior week's range and also trying to sustain the upper side. So the more the price action is going to remain in the 50% and up of the prior weekly move, I still think that we may have a lot of pressure to the upside. And if we actually trigger into the trading session, I don't know, today, tomorrow, or in the next few days, within this week, above this prior weekly high, we have a really nice tradable void that we can exploit, and we can start pushing forward again. But if we are going to retrace, and this is again going to be a big retracement because we saw the volatility that came in, the volatility that came in last week, last Monday. In fact, last Monday we had a big red day, and it continued to trade in the red in the overnight trading session. And as long as we're maintaining these levels, I think we're going to be on the safe side. And if we're going to get more volatility along the way, and if we break below this low right here, I think that we may start retracing back into probably 27.15 or 27.10 again, or even more, and we may start a correction. As far as I'm concerned, we're still trading into a bullish market, and this is just a muted price action reaction from last week, massive move from the lows.
Yeah, the moving averages on the longer term are still rising, so it's probably a little premature to start putting a bear suit on.
Correct.
With regards to Erik, a little bit more juice as far as what you're thinking as far as where we're going, and maybe some overview on some other things if you have them.
Well, sure. First of all, Anka, that's a tough act to follow. So that's good stuff. You should be teaching this.
Yeah, she is.
Yeah, I know. Okay, let's see here. Let me share a screen and see what I can come up with here.
Sure.
Okay, so you should be seeing something that says TradeScope. I hope.
Yep. Yeah, I see it.
Okay. Yeah, so this is just looking at a daily, something that we just mentioned here. You mentioned the moving averages. These are just the 50-day moving average on the red line, the 200-day moving average, the blue line. So obviously we're still, well above the 200-day moving average. That's kind of that's like an oil tanker, right? That takes a bit of a few miles to turn that one around. But, we are below the 50-day moving average at the moment. The RSI we like to look at, not necessarily just independently at an absolute level, but really in relation to divergence or price divergence. You can see here the RSI, the price movement here made a new high. The RSI didn't follow, and then, had a subsequent sell-off. So that's kind of like, I think RSI or stochastics or some of these other oscillators are most valuable for me, looking at them in terms of divergence. But right now we're sort of, between these two moving averages on the daily chart. So that doesn't really give us a whole lot of direction there. And then I did pull up a 60-minute chart. So maybe if we're looking week to week, maybe the 60-minute chart gives us a little more insight. So I'm looking at a large pennant here, and let me just expand this out. And we're below the 9 period EMA at the moment. And, we did break this trend line here. So I think this RSI down, it's approaching sort of an oversold level, but it's certainly not conclusive. And I wouldn't want to suggest that it's oversold yet. But, I think there's definitely some potential for this to certainly fall and approach this prior low down here, 28.25 this week. That wouldn't really be asking a lot considering how volatile things have been of late. But that's sort of a general outlook for the near term. It's not something we typically look at. You know, a lot of our option trades are maybe 2 months in terms of their time frame, but nonetheless, there are some opportunities in shorter duration trades. So we do look at the different intervals. Sometimes a 30-minute chart is helpful as well. So that's what we're looking at right now.
Has the elevated VIX helped some of your spread entry points? Because
it's tremendous.
Yeah.
It's great. We can generate these really wide spreads and capture a lot of value. So,
right.
you know, other than muddling around 10 or 12 with the VIX, you know, now we're kind of back near what used to be historic norm.
Right.
You know, 10 or 12 seem to be the new norm, but we'll see about that.
Right. Okay. Turning over to Jeff. Jeff, a little bit more substance on where you're thinking this market is going.
Sure. I'm going to try to pull up a couple things that we've been showing also. And as I click here, I'm really pleased to hear everyone talking about seasonals. And I know it wasn't perfect last year, but over time, I think it does work. I know it does work. Oh, let me get this out of here. How do I make this full screen here? There we go. So here's our newsletter from last week. One of the things we do at Stock Traders Almanac. And here's the seasonal pattern. And you can see we're pretty much right on path with the, you know, mid-July to early August pullback. We got this sideways pattern we're looking at. Generally, the market tends to, you know, sort of leak higher to resistance over the next month or so to mid-September, and then a further test. And we have had, we are on the cusp of another down Friday, down Monday. So it can be something that's a little negative. Here's my chart technically that I was sort of mentioning some of the levels on there before. I highlighted the last October start of the sell-off. So while historically the selling in August hasn't been all that bad, it can open up as we had in like 2015. So the sort of setup here, the image is, you know, familiar from last October. If we can clear some of those levels, maybe not as onerous, but if we break through that 28.15, it becomes a little bit more, you know, concerning. So I mean, this is right up our alley. We've been prepared for this. Our headline from a couple of weeks ago for the newsletter was, you know, August outlook ripe for a seasonal pullback. Similar chart I keep updating. So for us, it's right in our wheelhouse, and we're sort of sitting on the sidelines right now looking for a little mid-month pop. So that's sort of the seasonal and technical color I can add to that right now.
Okay, great, Jeff. And Jake, could you fill us in a little bit on what you're seeing and what your reasoning is behind your opinion for this week?
Sure. Can you see my screen?
Absolutely.
Yep.
Okay, cool. So a couple things. I'll start with the daily. So I've got a couple things on here. I've got the EMA 50 from the daily chart. So this is the daily chart over here. You can see when we finally started to break down, that's when things really started to accelerate. And when we finally did catch a little bit of a bid down here, it was right at the EMA 50. And this is actually the weekly EMA 50. So the dashed is the weekly, the solid is the daily. And you can see how we pretty much ping-ponged right back and forth. So we bounced right off this area, bounced right back to the daily EMA 50, and now starting to pull back. So my guess, and this is just simply kind of based on this, I'm kind of thinking we have this type of move where we've got this little bounce. Here we actually bounced above the EMA 50 back in May, kind of had a little fake out and then a continued breakdown. And so, you know, my thought is we could probably continue down. That's just based on kind of this previous move and the fact that August can be fun times on the volatility side. And if we did kind of continue to break down through here, I have the anchored VWAP from Alpha Trends pretty much anchored right at the bottom on December 24th. And we can see when we did break down through that area, the EMA 50 from the weekly back in late May, this was the area that actually did finally catch the bottom. So those are the two areas I'm watching. And it's these are kind of status quo areas because, you know, if we do break down through those areas, this was really, especially the weekly EMA 50 was really where we started this breakout on the longer term side of things. So we did have a nice V shape here But then when it finally did break out, pulled back and tested this area and then continued up. So this is kind of what I would call my status quo area. If the market can hold this general area, I think, there could be a nice bounce, but I don't really know the future. So we'll just kind of see how it goes. And these are the areas I'm watching. And so the way I personally do that on TrendSpire is I just go and create an alert. And I think Jeffrey was saying this, where, this is definitely not a market where you're drawing with a fine pencil. This is definitely more of a marker highlighter type thing where, I want to be alerted anytime we get anywhere within this purple area. So anytime we break down through that area, that's when I'll kind of be alerted. So a lot of the time I can't watch the market daily, so I let the alerts kind of just let me know when we're breaking through one of these important areas. On the longer term side, this is kind of what I'm seeing. This is the monthly chart of SPY. We're pretty much still in divergence on the RSI, which has shown some pretty big moves in the past, but we have also had false false divergences where we did have higher highs here, lower highs, but then we finally broke out and hit new highs. So until that really sorts itself out, I'm kind of on the more bearish side of things, but it's kind of back to the case where to put your money if you can't put it in the market at this point. So that's kind of my thoughts.
Yeah, I definitely can see the idea of zones rather than exact points. In other words, 2950 to 3100 on the S&P, in my view, was a sell zone, and if we got a throwback rally, 2975 to 3000 might be a zone of resistance. So the zone idea seems to make more sense to me than trying to be picking exact numbers in this kind of activity. Okay, let's turn towards the final question, and then we'll get into some other stuff. But the final question's about, there's so many different places to trade nowadays, and people who listen to the broadcast probably have a place where they're trading now, but maybe they'd like to hear about alternatives. And so starting out with Anka, we are going to go into where you believe is a platform that is beneficial, and brokers that execute trades in a beneficial way, in your opinion. Where do you see the platforms, and where do you see the brokers?
Hi, Jim. Well, I have been using TD Ameritrade for a long period of time, and that is, I think, for the last 12 years. And I was using different brokers for different areas of my trading. I was, back then, I was also doing some Forex trading, and I was using a different broker, and I was using the MT4 platform. I was also using back then TradeStation for my stock trades and some options trades. And I was using a plethora of brokers and platforms. And I had my fair share of navigating from one platform to another. And it's not a cup of tea to navigate and actually learn how to use the platform. So they're not that easy to learn and to get adjusted to them. But like I said, about 10 years ago, I have shifted everything, and I have transferred all my funds, all my trading funds, to TD Ameritrade. And I'm using the Thinkorswim platform, which is a very robust platform. And I am doing my options. It's ideal for options trading. It is fantastic for swing trading, and also for everything that you need to trade, whether you're trading Forex or day trading or swing trading stocks or doing options. I find that this is the perfect platform for me at this time. Like I said, I love the charting on it. It's very versatile. It's very robust. And it actually handles really well through FOMC meetings, through big, through some big events that that we encounter in the market, volatility and all that stuff. So and this is just what I use. I don't endorse them. I'm not affiliated with them in any way, but I use TD Ameritrade. And lately I have to add, and it's not because Jake is here, but like I said, for charting purposes, even if you choose a different route, because commissions on the Thinkorswim platform are a little bit on the higher side. There is no cost for data, and there's no other cost for for the platform, so there is no platform fee, but that is translated into a little bit higher commissions. You could actually opt for a different kind of platform and use another charting system like Jake has, and I even use his charting system. Like I said, for the last 2 weeks, I've been sold on it. I love it so much. It is so intuitive to find entry points, exit points, etc. When you're doing your analysis. So like he said, just you have to be proficient in technical analysis, and once you're proficient, you know what to look at. So for me, it's TD Ameritrade, and it's the Thinkorswim platform.
Okay, sounds great. Erik, you have familiarity with all this trading platforms and different brokers to use. What's your opinion in this area?
All right. Well, I think that was very good, Anka. And am I allowed to talk about my own platform?
Sure.
Yeah. Well.
Why not? Why not?
Yeah. Well, I know I've used Thinkorswim in the past for sure, and
Sure.
it's very powerful. And there's a lot of bells and whistles, as we like to say. And let me put it this way, though. I think that sometimes when we run across clients, and the way we've developed our model of late in the last decade or so, is that there's some people that don't really want to go that deep, and they don't want to spend the time with a really powerful platform that has, I guess you could say in some ways can be very complex if you're not really a full-time user of it. So we developed our Theta Trader platform, and we're trading E-mini options specific to spread trades. And I think I mentioned earlier, we've generated an algorithm behind the scenes within Theta Trader, and it will generate spread trades every day. We call them Theta trades. And you can pick whatever your outlook is, if you're bullish, you're bearish, you're neutral, and then Theta Trader generates those particular strategies appropriate for that outlook, and then pre-populates the spreads, each leg of the spread, depending on the strategy you choose. And then it calculates the net pricing and so forth. And we have the infrastructure that we've created that allows those orders to be submitted through us, flow through Globex, and then get executed, and then get populated back into the platform where it can then all be automatically tracked. So, there's credit spreads, call spreads you might be writing, or selling put spreads. You might be doing iron condor strategies, or even six-legged spreads. And those can all be packaged up as one trade, one object, and then tracked individually as one trade. You don't have to, try to figure out your brokerage statements, which is a nightmare. So that's what's great for options trading, for collecting premium, selling premium on what we think are some of the most liquid markets, and have the tightest spreads, the best execution, and just a lot of opportunity in the E-mini complex, like the S&P 500, even the NASDAQ 100, and sometimes the Russell as well.
Okay, sounds great. And turning over to Jeff Hirsch, how's your feeling about trading platforms that are available and brokers you like to use for executing your trades? What's your view on that?
Well, I'm not as much of an active trader as the others in this group, but I am familiar with it, and we do some things. TD Ameritrade is a great platform for advisors, and for our advisor clients, we do use that. Interactive brokers, I don't see that on this list or anyone mentioning it. I've used that for my trading and found the pricing to be really low, and the availability of a lot of things there. So I think interactive brokers is something to consider if you're a self-directed type person. Software-wise, I don't know if you saw my chart I posted up there. We use Trade Navigator, Genesis Financial Technologies. Part of it is because they have a seasonality in there. I know a lot of people do, but it seems to be pretty solid. And for looking at stocks, which I do a bit more than it sounds like the rest of the group does here, we go into Market Smith. Bill O'Neill's from Investors Business Daily. We're really looking at the charts and seeing all the fundamentals. Find that very helpful in our stock screening platform. So TD Ameritrade for the big stuff, IB, Interactive Brokers, and then we're looking at Trade Navigators software, and also Market Smith. And I do use Zach's Research Wizard for stock screening.
Okay, that's good information. Thanks a lot, Jeff. And finally, Jake, do you have anything to add as far as what you're seeing as far as trading platforms or brokers that you like best for executing your trades?
So yeah, I use TD Ameritrade for the most part, and I used to use Scott Trade when I was younger, and some of those other ones. But I like TD, and it's as Anka mentioned, the commissions are a little higher, but you generally get a pretty good fill and that type of thing. So that's what I use. I use TrendSpider. I'd use obviously TrendSpider for charting it out. TrendSpider, you can't make an actual trade yet, so you can do everything except make the trade. But that's coming next year once we integrate brokerage data.
Yeah, for what it's worth, Jake, those charts look pretty cool on TrendSpider. I like what I was seeing there.
Thank you. Really appreciate that.
All right. Well, we're getting into the last 10 minutes, and I was thinking I guess we've made a little bit of a new low here while we're talking here this last hour. And I was wondering if each one of us could give us a little bit of an idea or something going on that they're focused on that they think is pretty intriguing. So starting with Anka. Anka, do you have anything you're looking at right now? Any particular trade, any particular sector or anything like that?
Well, I was looking actually at the developments in China, and I think they're pretty scary. The Hong Kong situation is getting worse by the minute. And I think that there's going to be some fear coming into the market, and these developments have started just about an hour into our discussion today. So things are moving a little bit lower right now. I would just keep an eye on gold. Gold may be the hedge for the upper side. Also keep an eye on the VIX to balance your portfolio if you're invested more into the long side of things. And also crude is at an inflection point here into the 55, coiling around the $55 area. This is also going very soon, possibly over 55 and change, possibly going to trigger a weekly rotation back to the upside. We had a triple bottom on the weekly chart. We have revisited that 200 SMA for 3 times now, even though we're establishing descending tops on the pattern. We may get a squeeze if oil is going to break over 55 and 50 or so. I would just watch gold, crude, take it one day at a time with the indices. I don't think it's a great day trading environment, to be very honest, in the indices. So I'm going to shift my attention more into swing trading and trying to manage what I have. But one thing I can't help but notice is that Apple is actually very robust today, and it's still into the green. So I would just keep an eye on techs and on semis this week.
Okay, sounds good. And the semis definitely have gotten hit, so if they could stabilize here, there could be value there.
Yeah, good risk to reward ratio.
Yeah. All right, Eric, what do you got as far as anything particular that you might be focused on that you could share with us?
Yeah, absolutely. Well, I was a bit bearish, so let me stick with that. Let me see what I can come up with here. Let's see if I can share my screen real quickly. I believe you're seeing that, Theta Trader?
Not yet.
Not yet. Oh, I got to click the share button, don't I?
That helps.
All right. You should see it, right?
Yep.
Okay. So essentially, here's what I was talking about. If you're bullish or bearish or neutral, let's say you're bearish. Maybe you're looking at, we talked about drawing with the wide markers, not necessarily pinpointing things. So I think that's part of the advantage of selling option spreads. You've got a lot of wiggle room. It's like we call it, the real technical term for that, right? Wiggle room. Well, here are the trades organized by days till expiration, anywhere from 10 to 33 days. And let's just say you were to choose this particular trade here on these call spreads that you wanted to sell. So you would click that, and you can see a Theta Trader pre-populates the strikes that you should be trading. And you can look at a graph here of what that chart looks like. So here we're currently trading. And so you're selling the 30-35 call and buying the 30-55 call. So these are all covered spreads. And so that's kind of the visual of what that looks like.
Sure.
And you would be collecting, looks like 290 per spread. It's already pre-populated as a sell. You can enter whatever quantity you wanted. And then you place the order, and that's all she wrote. So hopefully you get filled on that. You can see it here. And so that's kind of what we would do. A lot of what we're doing, especially with the increased volatility, we're getting more premium, capturing more premium, more value, and you can get further away from the market. and have a higher probability of these working out. And then also we have a trade simulator. And if you, let's say you were neutral, some of us were neutral. There's an iron condor strategy that's neutral. So you can see here, you're selling these call spreads, selling these put spreads. And this is just looking back in history. I just picked a random date, actually. I didn't really, this started back in 2016. So we just play out the chart, and you can see how these iron condor spreads here can work, and you can see the different colors changing on the what we call the risk thermal indicator, kind of a color-coded risk and profit management. And it turns blue, it means take profits. If it turned red, it would mean get out. So it didn't turn red. So that's kind of what we do with our theta trader, and we can take an outlook and then apply a strategy to it and give ourselves a lot of wiggle room.
Is this considered auto trade, or does the customer actually place the trades himself?
The customer will actually have to initiate the trade, or they can accept the trade alert that gets sent to their smartphone.
Okay, but so it would be considered an auto trade under some circumstances, or is it a little different than that?
No, it's still considered self-directed.
Okay.
Yes.
Yeah, because some of these companies have auto trade where I guess the trades are just sent to your account or something like that. But the customer in this case is definitely in the control position.
Yeah, that's a whole different compliance nightmare. So we'd like to avoid that.
I figure that.
Yeah.
Okay. Thanks, Eric. Let's turn over to Jeff Hirsch. Jeff, what are we thinking here as far as something to focus in on, or something on your radar that maybe is not on others?
Well, just the compliance nightmare thing made me chuckle. I'm well aware of the compliance issues out there. I should give you my disclosure slide, but I like that call spread too, the iron condor. I'm going to show you some of the things that we're looking at right now. I wonder if I can share both of these screens. Yeah, that's pretty good. Let's see. How do I get that up there? So on our stock side, we just put out a basket of defensive stocks in June. A couple of them are still available. Some, defensive shares. This is not your day trading maneuver, but these are optionable trades, and somebody like yourselves who have option strategies can easily work in these. So even the big companies like, United Health, we picked up again, Verizon, AT&T, some nice dividend yield to ride the worst 6 months out. And on the sector side, if you look over to the right side, I'm assuming you guys can see all this. You see the ETF portfolio. We're looking at a really low ball buy limit on the biotech and the tech sectors, something that it's kind of a bearish look. We're expecting a little bit of a pullback here. So we just want to see if we can maybe get lucky and picking something way out of the money. And if we don't get them as these seasonal sector, bullish periods come into play in August, September, next time around, we might pull up those buy limits a little bit. But if we get lucky, we'll look at that. And you can see we already have a short trade on from earlier in July. The SDS is up a little bit now, pretty tight stop in there. And we did end up executing these gold trades, the miners, the gold, and the silver, just after this newsletter came out on August 1st, August 2nd. They all traded below our buy limits. So we're in those things. So we're looking at gold for defense, still a little bit short the S&Ps, and looking at biotech and tech on a low buy limit, getting in there going forward.
Okay, sounds great. And last but not least is Jake. And Jake, you're batting last, but you're also heavily endorsed by the other speakers as far as your product is concerned. So I'm hoping people that are listening will take advantage of getting information on that. What are you seeing as far as something that is on your radar that you could share?
Sure. So I'm going to kind of go against what I said about the SPY, because I do think, if the SPY moves down, probably tech will follow. But Netflix looks interesting. A couple reasons. We're in this kind of like falling wedge setup here. We've really consolidated for a while. And these are actually raindrops. So if you're looking at this candle thinking, what the heck is this? It's actually a volume-based candle. So you can see here on today's price action, we can see a lot of the volume starting to aggregate near the high of the day. So this range is just the price range for the entire day. This is the volume profile for the left. This is the right. So we can see as today is starting to kind of happen, most of the volume into the second half of today's period has been at the top of the price range. So it's interesting to see this holding. And, if we did break out of this resistance, the anchored VWAP from where we did start the move down back in mid-July would be the area where I would think maybe we move up to around, 325 or so. But this is what I'm looking at. We do have the gap above as well, which is always fun to watch. Gaps generally do like to fill at some point. So whether that's soon or whether that's, later if the market continues down, that's, we'll see what happens. But just based on this setup, I am liking kind of this action today with the volume kind of on the upper part of the price range today.
Great. All right. Thanks a lot, Jake. And right now we're coming to the top of the hour, so we're going to do a little wrap up. And at the wrap up, what we do is we go around the horn and reintroduce yourself, as well as how people can get a hold of you, your website, and if you have a special offer you'd like to extend, this would be a great time to do it. So we're going to start out with Anka. Anka, just to refresh everybody's memory on yourself and your firm, etc.
Okay, so my name is Anka Metcalf. I'm the CEO and founder of Trade Out Loud. You can find us at tradeoutloud.com and pretty much a Trade Out Loud handle, whether you're using Twitter or Facebook or YouTube. We have a lot of videos on YouTube, educational videos. And that's pretty much it. If you would like to get a hold of us, you could also email me at info@tradeoutloud.com and ask for anything about trading, including our services or our education. We have a class that is starting on Monday. It is the Day Trading Power Income Futures Trading class. If you're interested, just shoot me an email. And we're also going to have a free webinar on Tuesday. So hop onto our website and you're going to have a pop-up screen. Just enter your email. You're going to be receiving an invitation to our webinar, educational webinar, on how to day trade the first 2 hours of the morning futures. That's pretty much it.
Okay, thanks, Anka, and it was great to have you with us. Erik, again, just a brief background and some way to get a hold of you, and if there's a special offer.
Yeah, we can do that. This is Erik Gebhard. I'm with AltaVest.com. We developed a options trading platform, unique and specific to trading credit spreads in particular in the ES complex, and we use automated risk management and also profit directives. And also we include trade alerts. And if you want to get a demo, let me put that up here. Okay, you should see that demo screen. And you can just go to our link there and get yourself a free demo to the Theta Trader platform, and also start receiving trade alerts on your smartphone and get an idea for what it is we're doing and how it works. But love to chat with you anytime, so you can reach us at altavest.com.
Okay, sounds great, Erik. And Jeff Hirsch, again, a quick introduction again, and how to get a hold of you on the web, as well as any special offers.
Unmuted. Sorry about that. Yeah, sure. Thanks. Again, stocktradersalmanac.com. That's stock traders with an S. I'll give you a little look at our website so you can see that. And if you go to stocktradersalmanac.com and you click on the blog, it'll bring you to the blog. And then there's a little offer over here on Tumblr for discounted offer, $150 for 1 year. It's a pretty much a steal for the subscription. And then $250 for 2 years. You get all our stock picks, our seasonal timing signals, and all of the ETF sector trades and some other interesting trades throughout the year, depending on what the calendar gives us and what our analysis tells us. So stocktradersalmanac.com is the way to go. And if you're interested in the mutual fund, probabilitiesfund.com, or you can look up the ticker PROTX, and we're doing pretty well this year. So I think people have a look and see the performance.
Okay, yep, that's great, Jeff, and people should take advantage of that. And then, of course, we got Jake here from trendspider.com. And what do you have to offer here, Jake?
Yep. So just quickly, you can see my screen. If you want to learn any more about TrendSpider, just go to trendspider.com/product, or just go to trendspider.com and click the product tab up here. You can learn more about it, see the pricing on our pricing page, and start your free trial that way. So we have a full free trial for 7 days. If you'd like to extend that, we can do that if you need more time. And we always have some type of coupon code going. Right now, we generally give our coupon code after doing a webinar. So a webinar or just a general one-on-one. So we do one-on-one training with anyone who signs up. and you can get your coupon code through that avenue. So, if you have any questions at all, again, TrendSpider is just a charting platform to help your technical analysis process be more efficient and really remove some of the grunt work while keeping your analysis very discretionary.
Okay, great. I'm Jim Kenney, and optionprofessor.com is the website. We have weekly podcasts, and there's two things that I'm offering for people who want to email me at optionprofessor@gmail.com. One is a list of gold and silver mining companies that I monitor, and the other is the lockup expiration dates for the IPOs. Lyft is going off the board next Monday as far as expiration, and it's lost about $10 in the last week. So give me a contact on that if you have any questions. All the guests have been great. You should take advantage of everything. And David, you take it from here.
Okay, thanks. Oh, and Anka, would you like to make say a few words about the tech wizards?
Oh, absolutely. Okay, so David and I are planning a very big event on Saturday. It is the first event of this kind. It is this Saturday, August 17th. It is called Tech Wizards, and we are going to showcase a lot of technology that is going to not only improve your trading, but it's going to fast track your trading. And I know we talked a little bit about platforms today, and I mentioned that I use the TD Ameritrade platform, and I also use for my charting, I use TrendSpider. But guess what? Jake is going to be back here with us on this Saturday, and we also have trade ideas. If you guys are very active into the day trading arena, into the swing trading, even active investing in options, whatever your sphere, your arena of trading is, we have trade ideas. We have Sean McLaughlin from Trade Ideas that is going to present a lot of trading ideas and a lot of information on how you can use trade ideas to your advantage, to not spend a lot of time doing a lot of homework. We also have Brian Miller from Optimized Trading. We have Jonathan Mallard from Benzinga Pro. It is a tool that I use every single day. It's where I get my economic releases and all my information, upgrades, downgrades, etc., you name it. And we also have John Forhays and James Ramelli from Options Hacker. If you guys are into options, you don't want to miss this event. So remember, it's Tech Wizards 2019. The event is this Saturday, August 17th. It starts at 10 a.m. It's going to be for about 5 hours. It is free to participate, free to attend. It's also going to be recorded, so make sure you get on the list once you get the email out. And I believe, David, you're going to have also a link available on your
everyone will be able to access that through Timing Research. And if you're subscribed to the Timing Research YouTube and podcast, you'll be able to get those recordings as well that way.
Yeah, that's fantastic. So it's going to be a great event. It's the first event of this kind, Tech Wizards, and we want to bring the best of the best to you guys in terms of tech. So thank you so much.
Okay, and all right, thanks everyone. Great discussion for the show. So just a reminder, like I said, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. And you can also go to TimingResearch.com to get access to any of the past reports or show archives. Be sure to join us tomorrow for the 89th episode of Analyze Your Trade. Jim will be moderating again for that one. And I just want to quickly thank my guests again for today. So Jake Wujastyk of TrendSpider.com, Jeffrey Hirsch of StockTradersAlmanac.com, Erik Gebhard of AltaVest.com, Anka Metcalf of TradeOutLoud.com, and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thanks, David. Thanks, David. Thanks, everyone.
Thank you.